Hello, and welcome back to the Foreclosure Deals Coach podcast. I am your host, Donnie Corum, the Foreclosure Deals Coach. And on this show, we're going to talk about the difference between private money and hard money. There's a lot of important things to understand between the two of those and how they can benefit you to do more deals in 2025. Going to be a great show. Stay tuned. Hello, and welcome back to the Foreclosure Deals Coach podcast. I am your host and Foreclosure Deals Coach, Donnie Corum, and a lot of people come to me looking to do deals, and they want to figure out how to get the funding put together. So on this show, we're going to talk about Traction Capital, my lending division that can help you to do deals right here in the market. Now, there's some huge benefits to being part of the foreclosure profit system and doing deals, but even without the foreclosure profit system, I work with investors, agents, people looking to get deals done quickly, and I help to provide hard versus private capital to do those deals. So we're going to go into a lot of detail today on how the difference between those two money markets work, the private money market and the hard money market. But I really want to express to you that people look at real estate investing as as an investment product that's different than other investment products. When the reality is when you're buying a foreclosure deal, you're moving money. When you're buying stock, you're moving money. So really it comes down to, in every aspect of investing, you're looking at the transference of money. Now, what you're going to figure out, excuse me, my voice is really not cooperating today. What you're going to figure out pretty early on is that the faster you can move money, the less the money costs you and the more profitable the deal is going to be. So for a lot of people, trying to get a conventional loan on a mortgage is an absolute, to buy a flip anyway, or normal mortgage is an absolute disaster. And I remember this firsthand. When I bought my first deal right here in Colorado Springs, Colorado on 439 East Bijou, we didn't know anything about hard money. And as a matter of fact, there was a negative connotation, around hard money, because just the name, right? When you hear hard money, you think of, these gangster type, these mobsters, right? Who are gonna, if you don't pay, they're gonna break your legs type of thing. So with that negative connotation, a lot of people steer away from the term hard money. The rates do tend to be higher, right? There is definitely more risk in using a hard money loan. Well, this is where the market's really letting into private money. So what I'm doing now and what we're going to be spending a lot of time talking about on the show today is the variable between sourcing private versus hard money. But your simple source for this is my lending division. I'm the owner and operator of a company called Traction Capital. It's www.trackcap.com. And basically, this is the division where I help people, as the name indicates, to find fast and easy money loans. So if you're going to do a deal, since you're early here in the show, you want to find out how to get funding for your deal, you got to head out to trackcap.com. We're looking at it right now, and you're going to hit up the apply now for funding. I put the baddest button I could put on there to make sure it's very clear on how to get started, because when you're looking for capital, you're usually working off of a time frame. You got to get it done relatively quickly. So in this field, in this line of work, we help to get investors close on a deal in much faster than you get it closed if you were using a conventional loan, which can easily take 30 to 45 days. Well, the key to getting a loan done or getting a deal done is the ability to move quickly. When you're dealing with somebody willing to sell their property for $120,000 less than it's worth, there's usually on a time frame. So when you're talking to motivated sellers, they want to get this deal done right now. If you got to get standard underwriting done, you got to ask them to wait 30 to 45 days to get a loan done. You're probably going to be beat out by another investor who already has hard or private money established in the marketplace. So you're going to be beat out on that deal. That's no good, obviously, right? So if we can help you to get a deal done, we're also working to get that deal done quickly to protect the merits of the deal. Nobody's going to discount a property and wait a month and a half, 2 months to collect their money on it. When people are interested in selling a property, as a big, for instance, we're working a deal right now that's an estate sale, meaning somebody unfortunately passed away, right? The house is now belongs to the estate. The heirs to the estate are divvying up whatever the balance is after what's left of the mortgage, which isn't much, but it works out to be like $250,000. It seems like they're going to be getting. Obviously, they got plans for that money. It's the holidays. It's Christmas, baby. They want to take that inheritance. They've already lost a loved one. The last thing they want to do is wait for months to get the money. So the reason they're taking so little for this property is because we've agreed to close this deal in only 14 business days. Now, we could actually close sooner. My fastest closing on a private money deal was roughly 3 days. So it's very doable to get that done. 2.5 days total from the time that we agreed to buy it, got the title work done, and we're able to fund the deal. But that's where hard versus private money really comes into place. When you're trying to fund a deal with hard money, you're still dealing with a great deal of underwriting processes. You've got hard money lenders are basically lending institutions. They're companies where they've taken money, usually private money, right? And they've added an underwriting division, a sales division, a website, marketing, etc. And now they're lending money en masse. They're trying to make their entire business lending money. Private money is very often just a group of investors or an individual investor where they have capital sitting in an IRA or sitting in another lending area where they can move that money at their discretion with no underwriting, etc. They tend to be smaller. They don't market as actively for it. They rely on business development guys like myself to move that money on their behalf. And in exchange for moving that money, I get paid an origination to locate that money. So I've actually been a hard/private money broker for about a decade. A lot of people don't know that because I was wearing my real estate hat most of the time. But when I was finding a great deal, mostly for myself, I would broker the money to buy that deal through my private money network, who people I've known for a very long time who are willing to fund my deals. And now I have brokered with a couple of very large private lenders who across the country because of my experience. These are lenders that won't let just anybody broker their money. They want to work with established lenders who have a database of people who can move capital. Whereas I've been very focused for the past few years on doing deals for just myself. And then in the last 2 years, I brought on over 40 clients I'm brokering money for. Now in 2025, I'm going to be spending a lot of time brokering money for people who are not necessarily coaching clients, but have some experience. If you don't have experience, it helps to have coaching. So the coaching gives you the ability to access some of these coaching resources. And that's where the foreclosure profit system comes in, because I can get you a better deal on hard money or private money if you have experience. If you don't have experience, you're using my experience through the foreclosure profit system to get even access. Some of these lenders simply won't talk to you unless you are actually have some deal experience under your belt. And when you get to like the 10th deal that you've done, the terms you get are you're in a better tier of lending. So it's not about your credit score. It's not really about your debt to income ratio. You see that a lot with lenders where they're looking at you on your ability to pay for the deal. It really is based on your experience when you're talking about hard or private money lending. So again, to get started, you want to check out TrackCap.com. I'm going to pop that up here. This show and pretty much all the shows are brought to you by TrackCap. That's our Traction Capital. That's our sponsor today. But getting into the difference between hard and private money, let's talk about that a little bit, okay? If you want to get a deal done and you have absolutely no experience, more than likely you're going to want to find a hard money lender, okay? And the reason behind that is hard money lenders are a little bit more risk tolerant to people who have never done deals before. Now they mitigate that risk by having you pay more in points, so it's more expensive to do a hard money deal, and you got to put a little bit more money down. Whereas in private lending arrangements where when you have experience, you've done the 10 plus deals, you can get leverage up to 90% of the purchase price of the deal, meaning you're bringing in 10% of the deal, right? You got to work your way up to that. If you've only done a handful of deals, 3 or 4, you're probably still at the typical rate, which is 15% down right now. And in certain cases, you'll see 20% down if the deal warrants that because of the risk. Maybe it's in a smaller area like Pueblo, Colorado, often requires a little bit more money down. In Colorado Springs, though, for most rookies on a hard money deal, I can find you 15% down money. Okay. But when you start talking to private money, now you've got a relationship-based system where if you've got experience, they're willing to talk to you. A lot of my private money lenders I located by scouring LinkedIn to find people who describe themselves as having capital to lend. So I've construed that capital. And over time, I worked out some really solid relationships with some bigger private money lenders. One of the lenders I'm working with right now, recently signed a brokerage relationship with, is Anchor Loans. And you got to really check these guys out. I'm going to pop the site up because, as you can see here, they are not a small private lender. They have all the underwriting of a hard money division, but they are a very large private lender. So you see here that they have $14 billion they funded in total fundings. That's a lot of money they're moving around. They've got access to literally billions of dollars, and they move that money in and out of the real estate market. And you can get incredible rates from Anchor Loans, but they really only want to work with people who have the experience to draw that money. That includes who they use to broker and who they lend money to. Okay, so this is a harder company to break into. When I was really at the peak of our experience in 21 and 22, Anchor Loans was funding up to 100% of our deals because we were doing so many deals at that point, and we had so much experience that once we established a relationship with such a large private lender, they did a lot of deals for us. So that's one of the bigger lenders I'm brokering through. Another one I want to show you that I recently signed up. Anchor Loans is based out of California, so on the West Coast. The other one that I recently signed up with is Navigation Capital. And I want to show you these guys' site as well because another huge Navigator Capital, they private lending, and they're a very large company based out of the East Coast, couple $1 billion under management right now that they can move pretty comfortably, and they're happy to do so, working with experienced borrowers, that are looking to do deals consistently and have some track record in successful deals. So when you apply for a private money loan, you're also going to mention your experience. How many deals have you done? And they're often going to ask for a deal sheet. So they may want to see the HUD statements. They're going to want to get a little background as to your deal experience. Not only did you successfully do the deal, but did you make money doing the deal? They want to know that they put their money into buying your deals, that they've got a high probability of getting that money back and making money on the deal through the interest that they get, the points that they charge, et cetera, as opposed to having to foreclose on that deal later and deal with it. Private money lenders really don't want to foreclose on properties. That's not necessarily true of hard money lenders. And I want to give you the discretion there, because with a hard money lender, they have a lot of the same terms, high interest rates. And I will tell you, whether private or hard, you're going to see in the marketplace somewhere between 10 and 14%. Regardless of whether it's hard or private. So it's not cheap money. But when you're talking about hard money, a lot of guys go into the hard money business so they can foreclose on the property. This is not that they're bad guys, okay? And I don't want to, I don't want to slap the hard money industry in the face. It's just that it's not a relationship-based system. They'll lend money to anybody based on the merit of the deal, but they're hoping after you put 10, 15, even 20% down on this deal, maybe spend some money and time fixing this thing up, that you can't fulfill the obligation. I don't mean all hard money lenders, but there are definitely guys out there who are hoping you can't fulfill the obligation to the deal so they can take the property back. And if it was a deal you already bought at 70% of the value already, right? And then you put 15% down. That means they're buying a property worth, let's just use round numbers, of $100,000. Let's say it's worth $100,000. You bought it for $70,000, which is the only reason they would fund that deal, right? And then you put 15% down, so you owe them $55,000 on a property worth $100,000. Do you think they want to keep that house? They totally want to keep that house, okay? So hard money lending can be very dangerous for rookie investors, but most of the time you have to start at hard money to establish your relationships. when I am brokering deals for my clients, whether in the lending space or the coaching space, I'm looking for the softest hard money out there. I want to find a lender that is focused on the long-term success. So I broker through that. And you've got me as your advisor to not only make sure the deal is solid, so you're not going to get yourself into trouble on it, but that the process, the lender that we're dealing with is one of the good guys that I've worked with before, I've vetted, and I can ensure that's going to keep you out of harm's way on that deal. I don't want to see anybody lose money on a deal. Unfortunately, it does happen, particularly when people go in uneducated. They've never done a deal before. They don't really know how to get started. They buy a deal that's not so great. A lot of hard money brokers don't care about any of that. Okay. There's no relationship to that business. They simply want to move money because they're paid to move money, often 2 to 3% of the deal, right? And if they're moving a lot of money, they make a lot of money doing so. If you can imagine, if I'm doing a 200K deal and I've got a 3% origination fee on that, that's $6,000 for simply connecting the borrower with the hard money lender. So there's, if you do enough of those in a month, you can make a pretty incredible living. And I brokered a lot of deals over the years. I've helped a lot of people get into deals, but I try to do it based on the relationship because I'm hoping that you make a lot of money on the deal. So you'll come back to me again. Okay. Private money is where this steers off a little bit. With the private money system that we try to focus on at trackcap.com, we're looking to broker relationships through private lenders who are a little softer terms. They have no interest in keeping the deal. They're sincerely hoping that you'll get in, get out, get their money back to them so they can move on to the next deal as quickly as possible and broker that money again. Okay. A lot of borrowers really don't know the difference between the two. So they're simply out there eagerly looking to do deals. You'll meet hard money guys at, investor meetups and et cetera. And again, I'm not saying people are bad people. I'm saying you really want to work in a relationship where people have your best interests at heart. Traction Capital, my hard money brokerage, private money lender, private money brokerage is really focused on making sure this is a relationship-based system for you. The more deals that you do, the more deals you're going to do. And if you need that guidance and experience because you've never done this before, you can leverage my over 400 deals of experience through the foreclosure profit system. You get all the benefits of my experience to do the deal. So you can do it at a lower down payment, lower interest rates a lot of times. It ultimately saves you money. Obviously, there's an upfront investment into the system, but when you add up all the benefits of the system, you get a much better value ultimately by leveraging the experience because that's how these lenders are rating the deal. Okay, so that's my tirade on that. Guys, 25 is going to be very interesting. And the reason I know it's going to be interesting is we focus on Foreclosure Deals Coach on what's happening in the foreclosure market because foreclosures tend to be great opportunities. Okay, they're not always good deals. Not all deals are foreclosures and not all foreclosures are deals, but they tend to be great deals. Well, in the past few years, because the market's been hot, a lot of houses didn't make it to foreclosure. And then there's this big moratorium laid down by the government to stop the foreclosure process to allow homeowners to catch up, which although I appreciate, it led to a backlog of foreclosure deals that started 2 years ago. Well, if you looked at the HUD Home Store, which is a source of HUD properties, we buy a ton of HUD foreclosures. In the past few years, you've maybe seen 2 to 3 HUD properties in the state of Colorado total. Okay. Right now, there are 22 HUD foreclosures. And if you look across the country, that is a small number compared to some of the other states in the union. My point in that is a lot of houses were in foreclosure. They just did not make it to the market. They're what we call shadow inventory. And that shadow inventory is starting to trickle its way back to the market now, leading into a ton of opportunities. Now, if you don't know how to find a great deal on a HUD foreclosure, you don't know how to analyze the deal properly to make sure it's going to keep you out of harm's way. You don't know how to fund it. You don't have construction crews to fix it, and you're going to pay full retail to an agent to list it. Even these great deals can be bad deals for you. So with the foreclosure profit system, I'm mitigating a lot, not eliminating, mind you, because it's still an investment vehicle, but mitigating a lot of your risk in doing a deal by helping you to find the best HUD foreclosure deals, right? By helping you to analyze those deals properly, by providing funding through Traction Capital that's going to give you lower origination, lower interest rates, lower everything so you can get more money on the deal, and ultimately helping you to do as many profitable deals as you want to do per year. What do you have to do? You got to bring in the investment capital to sign up for the program, and then you have to bring the investment capital to do the deal. From there, my team of professionals in the foreclosure profit system walks you through each step of the process, allowing you to flip 4 properties per year at an average profit of $25,000. When you look at the investment into the foreclosure profit system, which you'll find out more about when you sign up at that link there to do an assessment call, you're going to realize that the benefits far outweigh the investment into the system. When you just look at the agent advantage alone, where we have my listing agent putting it on the market for as low as $2,500, okay, compared to paying 3% in commission to a typical retail agent, right there, that alone is more of a savings than you're going to pay for the system. So again, it's an absolute no-brainer as long as you are serious about actually doing deals. The reason there's a cost at all is that a lot of people out there who want to talk about real estate investing, right? They want to theorize, well, one day I'm going to do this, and one day I'm going to pull the trigger. And as a retail agent for nearly 20 years, I spent a lot of my career dealing with a lot of those dreamers, as we call them, people who wanted to talk about it, but were never actually going to pull the trigger. Well, needless to say, that got super frustrating, especially as a guy who was doing deals actively and finding deals all of the time, because I just love deal hunting. Locating the best deals in the marketplace is one of my favorite parts of this whole system. And this allows me to do this at scale. When I was buying 47 deals in my best year, I found that, I had wholesalers bringing me deals. I was scouting deals. I had a whole team of people to help me find deals. Well, that team is still around. They're still able to find as many deals as my clients want to do. I just don't buy all of them anymore. But one of my rules is I will never put you into a deal that I would not have bought myself. That's a critical part of the system. So you have very little risk in doing this as long as you follow the steps, sign up for the system, take the advice that you're paying for, okay, because this comes with an advisory. And if you are already an experienced investor, I can help you to fund your deals more cost effectively, getting them funded faster and not putting you in a spot where you're tying up earnest money, potentially losing earnest money on a deal you can't get funded on time. One great example of a wholesaler in town is New Western Associates. You probably heard of them. They asked for a $10,000 earnest money deposit that is non-refundable. So if you can't get that deal funded on time, that's generally 30 days or less, and sometimes it's 10 to 12 days, okay, then they keep that $10,000 in earnest money. I heard just a rumor, and I can't verify this, but that New Western kept almost $1 million in earnest money in 1 year alone from investors who could not get to the finish line because they had the wrong lender on the deal or they didn't have funding lined up. Okay, that's a huge cash business for them. It's part of their business model. I'm not knocking it at all. They need to make sure that their buyers are very serious about buying deals. They're making promises to sellers as a wholesaler to close on a certain date. And if they can't fulfill those promises, there should be a penalty. So I'm not knocking it. I'm just saying it's a little harsh, right? Especially for newbie investors who don't know what they're getting into and don't have funding lined up that can close on time. So please don't do that, okay? If you're a rookie investor, you probably shouldn't be dealing with New Western at all. But if you are going to deal with New Western, you want to have me and the foreclosure profit system there to line that deal up for you, make sure the funding is available through Traction Capital. So before you outlay a whole bunch of cash on the deal, we've already got your LLC set up. We've already got your funding plan set up. We know where the down payment funds are coming from. So you're not putting yourself in a position where you could lose $10,000 in earnest money because you couldn't get a deal funded on time. That's insane to me. Okay, so don't put yourself in that position. Step one, if you've got a deal, I want you to head over to Traction Capital, trackcap.com, click on that apply button, put in all the details. I will get you a funding plan within about 24 hours, sometimes less. We're going to get a loan quote to you because we understand that things have to happen very quickly in the investment world. Okay, just head out to the site, click on the apply now button. Let's get all the information we need to make sure this is a soluble deal. We'll get it to the lender. That can all happen in about 24 hours. And now you know for certain you can pull the trigger on this deal. You can put the earnest money down on the deal. You're not at risk of losing that capital because you've got a solid lender backing you who's already vetted the deal. I would love to be your coach and advisor in either the lending space or the getting a deal set up space. In either case, that's what I pride myself on my career, is helping investors, whether experienced or rookie, to get started in this business or expand this business and make a lot more money doing it. So if you want to get started with that, as always, I want you to head out to foreclosureprofitsystem.com. If you're already got a deal in the works and you're watching this video, you go ahead and head out to trackcap.com. I will help you get all the merits of the deal put together and line up your funding so this deal will be profitable and easier to get funded. Now that you know the difference between hard and private money, and you know about my connections to private money lenders, there's really no reason to pay the astounding, I heard of one hard money lender here in town that charges 5 points origination and 14% interest. Okay, there's no reason to pay that amount. There's always a little money that's a little bit cheaper than that, especially if you've got experience. But a lot of people don't know, and because it's hard money and the speed thing is a factor, they don't have time to shop it to multiple lenders, so they end up paying these atrocious origination fees and really high interest rates, which puts them in a worse spot on the deal, either making less money or in certain cases losing money, and the lender's making more money than you are. There's no reason for that to happen if you get the right advisory. I would love to be your advisor. Head out to trackcap.com. Let's talk about getting some deals together in 2025. And if you're not sure and you just want to kind of go over what the deal structure would look like, I would love to meet with you. We can chat by Zoom, or if you're in town in person, grab coffee, beer, whatever your preference is, and let's talk about getting you structured to do as many deals as you want to do in 2025. I'll help broker the financing for you so we can get your funding set up and make it cost effective for you. All right. That's enough out of me today, guys. I am so excited about 25. Here we are, just a few weeks from the end of the year. It's going to be an incredible year for great deals. I'd love to work with you and help you to get some deals done. Let's talk about that. With that, this is Donnie Corum, your foreclosure deals coach. Thank you so much for tuning in. And remember, now and always, don't buy a house, buy a deal.